Hi everyone, welcome to another episode of Stars and Startups with me, Varun Bumidi. If you're a first-time listener, don't forget to subscribe wherever you listen to this podcast. All links can be found in show notes. Just a quick message about Beandeck. Beandeck is our sponsor for the show. Beandeck is a coffee marketplace where you can discover the best Indian coffees in a single place. Do check out beandeck.com to find your favorite coffee and also sign up for the exclusive Beandeck Rewards program. Okay, about the show. We have Sudarshan Lodha, the co-founder of Strata, on the podcast to discuss his startup, Strata. Strata is a new innovative approach to investing in real estate, one that is data-driven and allows the investor to own a fraction of a highly desirable asset, making the most accessible real estate investment you could make. Super interesting chat. Let's say hi to Sudarshan. It's so cool to have you. I think we met in Chennai back in 2014, where you were just working with startups. And I remember we were bouncing some ideas off because you were already thinking about doing something at that point. A lot has changed. Congratulations on starting up Strata. Chennai is a terrible real estate market, and is that why you had this urge to want to solve for real estate? How did this whole thought come about? What is the genesis of Strata?
Chennai is honestly one of the best real estate markets, frankly speaking. Properties in Chennai are very, very expensive, which means obviously the demand is chasing the supply, and hence that's why the prices of the properties are very high. Again, it's also because of the coastline, like how Mumbai is. You cannot grow your city 360 degrees, but only 180 degrees, as a matter of fact. So that's there, but a good market, Chennai at least, especially from an industrial and a warehousing point of view, because of the port, the kind of industrial activity which is there. I mean, we are the Detroit of India with all the automotive companies, etc., being there. So it's a great market, but frankly speaking, the bigger opportunity which we saw more than anything else is when properties are expensive, it is unaffordable.
Yeah.
Right. But that doesn't mean that the properties don't have value and they will not continuously keep growing. Because again, like I said, especially from a Chennai market where your sea is eaten up half of the growth plan for you, and you have only the other side to grow. That means the demand for people closer to the sea is going to be very, very high as you move forward, no matter what, right? So, and from that point of view, we knew opportunities there, but they are unaffordable. Can we solve that issue? Is what our core idea was when we started Strata.
When I meet a lot of young people, say, let's call them in the early to middle income segment, they all have, because their parents have had the dream of owning property, home, living in their own home and things like that. Because a lot of them never moved from where they lived, right? So if I'm from Chennai, I don't leave Chennai. It has never been, there's never been a thought, but of course, with employment, education, there's some amount of migration because of jobs, and they find new homes, so to speak. But real estate is extremely unaffordable, like you just mentioned. So for somebody to save or put aside a crore and a half to buy a home loan companies are laughing their way to the bank, and they are the bank. And they make extremely high. Their leverage is massive, right? Their margins are massive. Has this impacted home prices at all, or those folks who had money are willing to take the loans, have the ability to take the credit, or were driving up these prices?
Well, honestly speaking, like I said, right, land is although an abundant resource, is also a scarce resource, right? Where people are like, no, I want a house in this location only, right? So that drives demand more than that. The entire socio-economic around that locality is very important. Accessibility to schools, to your schools and colleges, your hospitals, etc. At the same time, to workplaces also very close by. People love to stay in T Nagar in Chennai. Reason being, it's prime location. Wherever you want to go, right? You want to go to OMR, you want to go to the central part of Chennai, etc. It's all 7-8 kilometers itself, right? So it's become like a heart of the city. It's the center of the city, Nangambakam, T Nagar area. So everyone wants to stay there, and hence that drives demand. for the thing, because like I said, although real estate is abundant, go outside, you still have so much real estate, but the location is where the demand supply gap comes, because everybody wants to stay in that locality, right? Or even if someone stays outside, their dream is to own a property in Nangambakam or in Tinagar, right? From a Chennai point of view. So hence that drives demand more than anything else. It's the clear demand supply gap at any given point of time. But again, from a residential point of view, see, residential is close to India, is close to everyone, and it's in fact looked upon as a sign of prosperity. Right now, I own my own house. Right, that roti kapda makan story in India will always continue, no matter what, and I think across the world also. That will always go on, right? So owning a house is aspirational to people, and it is something which everyone wants to do it. And today, with the kind of lending rates which are available, it ideally makes sense for you to just take a loan and service the loan in the form of rents rather than just paying rents to some other landlord, right? So hence that is another blessing which has happened, from a home loan point of view. And again, during pandemic, etc., government has been very, very proactive to ensure the lending rates is even more lucrative for people to take, with all the other benefits, etc. The guys who we go after, or the guys who are looking at investing in strata for that matter, are people who own their houses, right? Who own their houses, who have more surplus funds. They obviously want to park money back into real estate. Arguably, real estate is the largest asset class of India. I mean, for all practical purposes, real estate might be 70% on an average of one's portfolio, for that matter, right? Like you have invested in stock, mutual funds, government securities, gold, etc. Real estate would still be 50-60% of your net worth. Maybe parked into your own house or multiple properties you might own. So, but what are people doing at this point of time? Even if they have a surplus of a crore, let's assume, right? They can buy another residential apartment, or they can buy plots of lands, right? Today, residential is giving you like 1 to 2% rental returns. Maybe if you have a great deal, maybe 3% at the max. But the worst come worst, office market property would give you about 7 to 8% return, right? So clearly this is a big 3 times, 4 times more what you can generate for yourself if you invest in commercial. Now again, the point people are not investing in commercial is because of unaffordability, right? The kind of prices you're talking about is so high that it becomes inaccessible for a lot of people. Aspirational again. First, it's the theory, right? That first I want this, then I want this, then I want this, right? So people want, yes, I want a house, I bought a house, I want a car, I bought a luxury car for myself. Now I want to own a commercial property which would give me a good rental income regularly, which would take care of my household expenses or whatever it is for that matter, right? And there is a clear appreciation in property also, which is happening proactively from an investment point of view. So hence this is there. But again, like I said, for a crore today in any markets, whether it's Bangalore, Mumbai, Chennai, you can't get anything, right? You might get a shop with a grade B or a grade C tenant, or some restaurant, the restaurant industry with mortality rates being the highest in close to about 70 to 80% every year. So there's no surety of regular income again. And hence from that point of view, we felt that if we can solve the whole grade A opportunity and give investors the most premium tech parks, premium warehouses, retail outlets, etc., which are upwards of 5, 10, 20 crores, make it affordable, make it accessible to these people who are today parking money into low rental yielding product. And only the ultra HNIs are the ones who are making such opportunities, is what we are. So we are the face of retail investors bidding against an ultra HNI or bidding against an institutional investor for the same kind of an asset which we would want to own. So that is what, as Strata we're doing, so that they can start making more money out of their money and, make better investment decisions from a real estate point of
view. You're saying that then the allocation for real estate is separate, right? Versus an equity, etc. So it's basically, if you had a portfolio, you would just allocate some aspect of it to real estate, and that's where Strata plays a role. If you want to diversify, right? As an asset class, how does it perform compared to some of the other investment assets?
So one thing about commercial real estate and or real estate itself in general, what people have is capital protection. They're like, hey, I know this is a piece of earth which is never gonna die, or the value is never gonna go, because people are still gonna India is going to produce more and more people would want to come back to cities. Urbanization will continuously keep happening for that matter, and the demand would always keep going up as a matter of fact. So people are aware of that, and it's a precedent of 50 years where they've known that real estate has not crashed. Real estate has always been either stable or has gone up. Right? It's not corrected. Even if there's correction, probably 5-10%, but it recorrects again and goes back to where it was with the demand supply gap again, right? So hence people's perception about real estate is capital protection. When they go to equities, even gold, etc., there's a good chance that you might even lose your capital. So hence, allocation of one's portfolio always is 50% towards capital protection. Yes, the other things I wouldn't mind taking a little gamble with, if that's the right word to use. To play around to see if I can get better returns, or probably fixed deposits also, which is capital protected, but again 6-7%. Your money is not making money for you; you're just getting your inflation returns. But good money managers make way more than what the inflation can give you, right? So what real estate can give you is with rental returns a little more than the inflation rate plus the appreciation. So you're actually making money, and your money is making money for you, right? So that is what smart money managers can do, as a matter of fact. But to give you a precedent of how CRE or commercial real estate has performed in the last 7-8 years, it has been the top 3-4 assets which has outperformed in the market with upwards of 10 to 15% returns year on year, rent plus capital appreciation put together.
Wow. But does this change geography to geography?
It's very difficult, right? So, see, every geography has several markets, and every market works very, very differently, right? Like if I have to look at, say, Chennai market, a Nungambakkam market versus an OMR versus the new GST road market, etc. They all work very differently, right? So new upcoming markets, obviously the kind of returns you can make is much more because your risk is also a lot more. But evolved markets like Nungambakkam, etc., are markets where it's safe investments. You want to sell it. There are enough and more people who are always ready to buy, but which means your capital appreciation is not going to be that much. So market to market, property to property, a lot of things differ. And likewise, if in a city itself, market to market things differ. So obviously, different cities work very differently with different laws and everything around it. Right? Like Mumbai real estate is the most complex real estate market the world has ever seen. With the kind of laws and everything around it, is just out of the reach because it's such a large market in itself that it's just super weird after a point for you to understand everything. So hence every market is different, every asset class is different. Like the way retailer functions is very different to what a residential functions, to a office market, to a warehousing market, etc.
What's interesting is when you talked about owning real estate, and you're talking about CRE specifically, commercial real estate, and making it affordable or accessible to, I guess not affordable is not the right term, making it accessible to retail investors and not just HNIs, right? Globally, there's been this trend in the last decade where people have been doing fractional ownership, be it of shares. If I have a 20,000 rupee share, I can own 100 rupees of it, right? Or if there is a Pablo Picasso painting, I can own one fraction of that painting. As a group, I can own it, right? So this has been a trend that has happened over the last decade, where laws are being created so that people can own, pieces of this asset. But the interesting part about these assets, and something that I didn't understand necessarily, is what happens when one person wants to sell it, right? If there's no dynamic, demand and supply for that particular asset, right? What happens in that case? Because there's always going to be, if you look at any other instrument, there's going to be breakage, but breakage is typically just an advantage for the company that owns that piece. But in some of these markets, I don't think people are able to put away that kind of cash. So I'd love to understand how you do the fractional ownership in India and how is it being perceived, and what do you do about the breakage?
Well, across the world, or probably even Indian stock market is a classic example. What is a share, or what is a fraction of a share, is what stock market is, right? You're buying a fraction of a company is what the stock market is also all about. But across the world, this is a pretty evolved concept, especially from a CRE point of view. In the US, there are at least about 10, 15 companies operating upwards of $1 billion in AUM each. the largest, owning close to about 3.5 billion in AUM in just 5 years of their existence. So clearly, this is a market where there is a lot of investor interest, wanting to own and enjoy the capital appreciation, etc. This is very institutional as well. At the same time, the way this is being operated in India or across the world for that matter, and what we are trying to institutionalize in India. So it's not a new thing. In fact, in US, even the Michael Jordan sneakers today, the antique ones, the memorabilia, etc., are also sold on, fractionally to people. A Rolex watch of 1950s, etc., is also sold. There are companies like Riley Road, etc., which is doing a phenomenal job, giving those also as an asset class opportunity. There are companies who sell jets as a fraction, where you can own a private jet and you start enjoying the rents from what the jets are able to do. Arts, paintings, etc. Right, that everything has a market, because when things get expensive for one person to ideally put and becomes a very concentrated exposure in one thing is when the need of a fraction comes into it. Right? Example, company, right? If imagine a company being about 1 lakh crore or whatever the valuations is, then it becomes unaffordable for even a large private equity fund to come in and start owning a percentage of that, because it's too high, right? So hence, fractioning it, breaking it down, offering it to retail is the only way one can scale and make it sustainable. So across the world, stock market is a classic example, but real estate definitely requires for you to explore this business, and try to create this kind of an opportunity for them. So that is how it is now. Exit options, etc. That we have multiple exit options. We have a resale platform through which one can exit. We do an entire asset sale itself once we get the majority shareholders approval to sell the entire asset or the owners of the particular property. So that way, the control is in the hands of the investors on how they want to go about owning and selling or liquidating their assets whenever they want to. But we are creating multiple liquidity options, which ideally in a normal world, if you are directly invested 50 crores, it becomes a big challenge for you, because first, concentrated exposure. Second, liquidating a 50 crore property in today's market is not a joke, right? Because even ultra HNIs today who have the cash are also thinking, should I park so much money into just one asset? What if in case this market is not growing and my entire ROI for that asset is stuck, and etc., etc. So hence, a lot of things differ, and hence that's what we're trying to do, where investors through a platform can diversify. That yes, there are 10 properties you can invest in. You get to know all the properties, all the details of the properties, and you can start owning it accordingly. But more importantly, even if 2 tenants leave, you're still making a sizable ROI. Or if 2 of the properties are in a micro market where there's no growth happening any further, the 8 is still giving you a good return and doing it, right? So, thumb rule of investing is diversification, right? When, like I said, if one's portfolio is 60-70% real estate, probably 20% is equity and 10% is all the other asset classes, gold, everything put together. So when your 20% of your net worth is highly diversified across, say, an HDFC Bank stock, an SBI stock, all these other stocks, but in real estate, there is no such reason why anything like that has been done before and why it should not be done. So that is what we're trying to solve. Yes, accessibility, diversification, and liquidity options for investors. So that is what, it's solving a big problem which exists in today's market.
In today's market, and especially in this world, data has become kind of pivotal in making some of these decisions as well, right? What amount of data contributes to, say, maybe picking a property? Is there enough data in India for you to make such decisions? Right? And how are you guys going about that?
Well, so we've got good partners with us, where we are working with them, where we have access to every sort of data what one would require from a real estate point of view, of all the sale and lease transactions, etc. as well. So hence, that's what we have partnered with them to give access to all the investors, for them to get access to that data before they decide to invest. So it's very important. See, real estate does not have an MRP, unfortunately, right? But giving an MRP for real estate, or at least closer to an MRP. An MRP can be what have been the last sale transactions which have happened in this micro market or in this building. For that matter, is a good price point for you to evaluate and then take it forward, right? So all that data access which we have, and we're the only ones who have it, is a big leap of trust what investors are also seeing, because you don't have to rely on you and I saying, no, price is 10,000, go ahead and buy it. We're like, no, the registered is 9,000 bucks. Please go ahead and buy it at 9,000, probably 100, 200 bucks more. Basis you really like the property, etc. So a 5% deviation is still fine, but anything beyond that, you're ideally, overpaying for a particular property at the same time. So that is the most important point which investors need to understand. So that is available on our dashboard today, on our platform today. We give investors all the access to all the sale lease transactions happening in that micro market before they decide to invest. So that builds a big amount of transparency to them, because they are aware of the fact that are they buying at a discount, are they buying at market price, or are they paying a premium to acquire this property at the same time. So that is the biggest point which we're trying to bring on.
The partner, that you referred to, is that PropStack? I think they are partly a strategic investor as well.
Yeah.
Can you tell a little bit about how that works, that partnership, and why do they want a piece of your company?
Well, so more than them, we wanted them to be on board with us, and all the three founders at PropStack and I, both of us, we had great synergies. We had clear ideas of how we want to do things, how we want. I mean, their objective was to bring transparency into real estate, right? When they started the whole data business, what PropStack is building at this point of time, and our synergies aligned, because even that's what our intent has been. People have been cheated in real estate very proactively at the same time. So by bringing that kind of transparency into the system, I think you can go a long way. Not ensuring your investors overpay for a particular property, or even if they are overpaying, they should be aware of why they're overpaying. That should be a rationale around it and stuff like that. So that's when we felt that a lot of synergies, where I requested, why don't you also be a part of our company, and we can work collectively and scale this up as an opportunity to investors in a big way. For that matters, that we knew this is a big market, untapped. It is arguably the biggest size of the market which is untapped. Like, say for instance, assets which your large funds like Blackstone, Ascendas, etc. want to own are probably the 20% of the market. The 80% of the market is driven only by HNIs and developers at the same time. So that is the market which we are going after. So if billions of dollars has been poured by the large funds into that 20% market opportunity, imagine the kind of opportunity what the 80% has for investors at the same time. So we compete with direct investing, when investors want to own an asset directly versus owning through us, is what we compete against, right? Where we tell people, hey, same risks which are associated to your investment if you had owned it directly, whether it's the market stagnancy or the tenant leaving, are the same risks associated with us. But at least good thing with us is that's our business, and we keep proactively managing our assets, identifying new tenants, and keep ensuring that your property is always tenanted out. Again, with the data, that's also a very, very important pointer. No point quoting unreasonable rents, hearing what the market rents would be, but knowing what the actual rents market is paying or other tenants the building is paying helps you close deals faster. Also, as a matter of fact, so this is what is our biggest plus point, we feel, and something which we can scale it up as we move forward.
So, are you saying that because you have the advantage of data, that it's better for investors who have maybe smaller commercial real estate? They have these small shops that purchase in maybe in Ambattur or Avadi or whatever, to liquidate and rather invest in StrataProp properties?
See, simple, right? We are going after grade A assets with grade A clients. So these are big corporates and big buildings, big premium buildings. Like, let's say in Chennai, on Nugambakam High Road, premium buildings in Nugambakam High Road, or probably on Gindi, where Olympia Tech Park and all these big tech parks are available over there, etc. Now, the kind of tenants are not going to be your smaller tenants. These are going to be large MNCs or companies who are wanting to occupy 50,000, 1 lakh square feet of office spaces also at the same time. So it's your choice. Who do you want your rents from? Do you want it from some small shop where you might come and probably give you cash as rent? Or you want something which is more binding documents, binding agreements with large organizations who believe in corporate governance, ensure they pay you promptly at the same time. And those are properties and those are locations which are always going to be high in demand no matter what, right? So clearly, we tell people definitely worth liquidating all your smaller assets and put into premium assets. Premium obviously gets you premium tenants and premium prices also at the same time. And it's also about the comfort, right? Where no investor would be like, yeah, I have some SV Enterprises as my tenant versus him telling I have Royal Bank of Scotland as my tenant, right? So clearly people's perception about the kind of property you own, the kind of bank balance you probably have, etc., completely changes from an SV Enterprises to an Royal Bank of Scotland kind of a tenant, right? So there are pros and cons for every kind of opportunity. Investors, we tell them only one thing: stop buying residential apartments from an investment point of view. Right. It is just pouring money into down the drain, more or less, because appreciation is not happening in residential anymore. It's an end-use market. It's no longer an investor market. There was a time where residential used to give those phenomenal returns. It's no longer that opportunity for now. So hence, yeah, that's clearly why we feel we have a bigger opportunity.
No, I think it's spot on. I mean, I think that seems to be the more contemporary wisdom, right? Of not, if you don't have the money to put aside, then why put it in a residential business, rather a property? From just kind of going a step back to the fractional ownership piece, why aren't there more businesses like StrataProp doing fractional ownership? Is this because of legal challenges, or is it not under law? Is it allowed? How are you navigating that?
So today we are in a gray area where there are no laws ideally existing, but the closest law which we have, and we are complying with that. So that is what it is. I mean, we are in the business what Flipkart was in 2008 when there were no aggregator laws. Laws came only in 2014, 6 years after they were existing. And they're still being the laws are still evolving for aggregator
regularly.
On a basis. Exactly. Like e-pharmacy, there are no laws even existing now. There are companies built, companies sold, like how NetMeds is acquired by Geo, and companies shut down as well. And laws are still happening. So the thing is, at least that's what our advisors and everyone's like, that if there are no laws exactly for your business, although this is a fairly regulated space across the world, in US, UK, Dubai, Singapore, Australian markets, etc. But if it's not there as a clear thing, follow the closest law and ensure you comply with that, and try going to regulatory bodies and say, hey, why don't you start regulating our business? This is what we do. And that's what we're doing proactively. Sorry, yeah.
So you are taking a proactive approach to go and actually get laws written so that you're on the right side of law. Wouldn't this mean you're inviting competition as well? Because you're making it a free for all in a way, because you've done the hard work. And which is what happened with Uber and all these guys as well, right? Because they lobbied, they got all the things sorted out. And of course, Uber was already a behemoth, so it's very hard to compete. But, in a space like real estate, every second guy you probably know is a broker of some sort. And he'd be like, hey, I can go and do this.
Right? So the business looks easy, Varun. It's not as easy as it looks. People like, property lena hai, you have to sell it to 100 investors and do it. That's the 1% of the business which we do. 99% is managing the asset, bringing a lot of technology at the same time, continuously managing your asset with respect to lease management, tenant relationships, etc. Looks easy for people, but it is not. And there are 100 investors, 100 people think differently. Solving and servicing everybody with all the transparency, with all that data and understanding is also a big challenge. So, might be easy for people, but again, I think there's always the first mover advantage. So, if you are able to build that brand which is doing things, I think the whole industry of the world aspires you to grow more than anybody else also at the same time. So, clearly, Uber was lobbying. It's still Uber today, right? There's nobody else who's there. And in India, Ola was lobbying. Ola is number one at the same time. And there are only two players who will survive. So competitions will keep coming, but survival is always of the ones who are doing something perfectly fine with a clear intent that customer service, and for us, investor wealth is of paramount importance. So we do not want to overpay for a property, etc., at the same time. So we are creating moats for ourselves with the kind of technology we're building, with the kind of partnerships we're building at the same time, which will ensure that even if competition creeps in, we honestly don't see ourselves having a dent in our business. And real estate is too big a asset class, Varun. I mean,
You
an
need to own a
embassy is
small piece.
embassy in Bangalore still probably owns only about 2% of the office market of Bangalore, or probably a little more. Right? There's Brigade, there's Prestige, there's everybody else, right? And everyone's doing a phenomenal business, and everyone's very happy with their own piece, right? And this is just Bangalore, right? You go to Gurgaon, you have DLF, Vatika, I don't know how many other developers all doing a phenomenal business. Likewise, Mumbai, Bangalore, Hyderabad, etc. Right? So even if there are 10 competitions like how it is there in the US, I think everyone can do $2-3 billion of AUMs in no time.
So how do you execute something like this? So do you create like a special purpose vehicle and then kind of split it up and then treat it as a fractional ownership of that for every property that you then have?
Correct. So we follow the institutional way of doing. So large private equity funds, everybody floats SPVs to acquire properties at the same time. So we just tell our people, instead of going and putting money in a private equity fund, we are directly getting you ownership in the asset holding company, which is going to eventually own the asset. So that is what we do. We float SPVs for every properties, and investors own the SPVs.
So it basically limits the risk to that property, and it's not as complicated as it probably sounds. Interesting. You said you're looking at creating wealth, right, than anything else for your investors. Now, if you look at a typical real estate deal, the reason why an investor puts that money in there is for two reasons, right? One, you can show that as say home loan amount, in your tax forms. You could do long-term capital gains. You can take that money and then put into a new property and then pay stamp duty in another place, and then again there's a lot of these rules in which you can increase your wealth by doing these transactions, right? But in an SPV scenario, you wouldn't get all those benefits, right? Is there sufficient reason to take the trade-off?
Well, see, I mean, you don't get best of both the worlds at any point of time. So you might as well get an opportunity to first win. But yes, we are building different opportunities right now where we're working with few NBFCs and banks to create a loan product around it so that investors can start leveraging this as well and start generating better returns. Again, so everything cannot be done on day one. We build products basis what the thing is, and even for any banker or any NBFC, they should feel that there is size to this opportunity rather than just 1-2 deals. You've done it great, but I can't build a product just for those 1-2 deals, right? So it takes time, and these are large organizations, institutions who are not as agile and nimble as how a startup would be, and that's when we eat up their business, right? Otherwise, they could have been where they are, eaten us up, overnight, as a matter of fact. So there are all these perks which are there in things. We are building it slow and steadily, and there will be opportunities which investors can make.
But to that point is I think specifically just leveraging any capital gains that you make in a typical real estate deal. As far as I have not sold any property, so I don't have too much of knowledge. But as I understand, is that if you invest whatever proceeds of that property into a new property, you would not have to pay capital gains.
Well, Varun, that's only for residential. That's not for commercial anyway.
So then the trade-off is not then commercial, and will happen in other scenarios. What you're saying?
Correct.
Okay. Or if it's a piece of land, right?
Exactly. So commercial, you can't take those benefits anyway.
Understood. What's the future here? What's your target for hitting? The reason why Mayfield and SAIF partners have kind of invested in you. What is the big vision you sold to them?
So honestly, the idea is to be a $1 billion AUM company in the next 3 to 4 years itself, and it is easily doable. It's not that it's not. That's when we're building the tech and building a team now for the future. Today we are managing only about 196 crores in AUM at this point of time, very close to 200 crores. But we're very confident that by March we'll be at 500 crores itself, or 12 months from today we'll be sitting at 1,000 crores in AUM. So that's what we're doing. We're codifying the entire learnings into tech processes so that we can scale up across different cities. Today we are only in Bangalore. We want to scale up across different cities, one after the other. Codify, keep learning from those experiences, and keep scaling up. So yes, 6,000, 7,000 crore AUM in the next 5 years is what our vision is.
That's pretty massive, man. I know you're a lawyer by training, and we went to the same college for BCom. You've obviously done better in life than I have, being a lawyer. Is your co-founder Priyanka also a lawyer?
No, no, no.
And what's the
So,
partnership like?
so like I said, right, so she's the finance person. She's the actual numbers lady. I do the structuring piece, the legality check, etc. I think it's very, very important, especially if you're coming from a real estate point of view, to verify small things. People miss out, and it's very important for you to check all those things. So that's when I come in. Priyanka is the number lady. She knows the evaluation of every opportunity on how to go about it. Is it the right price at which you're buying, etc. So she understands those parameters. So hence, the partnership was great. I also come from a little warehousing background as a part of family business. So I understand warehousing sector clearly, or how good it is, and how good from a long term stability and regular rental income. Nothing beats the warehousing business also at the same time. So that is where I came. She came. We felt there's a clear synergies where both of us can work together and drive the business proactively. Although a lot of things have changed. We built teams who are doing proactively a lot of things, and she's handling the entire operation. That I'm leading business currently.
Fantastic. What's your team looking like? Are you looking to hire people, to get your $1 billion AUM?
Well, see, we would need team, but I think there's a lot of things what technology can solve for, where you don't need human intervention beyond a point. So we don't see ourselves being a team like the large organizations, 100, 500,000 people kind of an organization.
Yeah.
I think we can leverage good amount of technology, which we've already started building. Like I said, for the future, we are a team of 30 right now. We might probably be a team of another 30, 40 at the max, pan India, to manage our $1 billion in AUM. So it's not a business which, if you effectively build technology, you don't need to build armies, and that's what technology can help you save those costs.
Cool, man. If you're hiring, I'll leave the careers email with our podcast. But Sudarshan, great to see the success of Strata. I know it's you're coming up with your new property in a couple of weeks now. Is that already pre-booked, or it's yet to go live?
No. So there's nothing called as pre-booking or whatever. We go live so that investors can make the most of the deal. But yes, now that investors have understood what we do, they've been getting their rents on a month-on-month basis. We are seeing the word of mouth being our biggest strength. They like the fact that what we're trying to do never before has been done in real estate. As a matter of fact, so that's when that is biggest success stories, when your investors become your brand ambassadors for yourself, and that's when you keep growing up bigger and bigger. So there's nothing called as pre-booking, but we listed. But our last asset got funded in 7 days. 4 days we got 100% commitment. 7th day we had entire money. In fact, we were oversubscribed by almost 2.5 times of the entire property. So it was a 26 crore asset, but we got commitments of more than 60 crores for that asset. So clearly, people who understood want to make the most of it, and we got one of the most lucrative opportunities too. So hence, from that parameter, we were very keen, and we keep telling investors, if you want to understand our business, please call us before the asset is listed. Once the asset is listed, you ask us only questions related to the asset, because others have already understood what we do, how we do it. We have 600 investors today who have invested on our platform, so they know, and their friends know what we do, how we do it, because they have probably shown them, etc., etc. And any asset, if it's a 50 crore asset, at the max we'll be requiring like 125, 140 investors. So clearly the supply would be less, the demand is more. So people make decisions faster, is what I request people to do.
What's your business model here typically? It's just a cut, you get a couple of percentage points over?
So our business is very clear. We just charge a percentage of management fee every year, and then we take a performance fee. If you make an appreciation alone of properties year on year at 8% hurdle rate, imagine you invested a crore, you're exiting at 1 crore 50 lakhs. Only appreciation, not the rentals. From a compounding point of view, you should make about 1 crore 45 or 46 lakh odd. So for that 4 or 5 lakhs which you made over and above that, we take a 20% of that, so which is about $80,000 and something. So clearly, until you don't make money, we don't make money. That is the clear idea. This is the biggest shift which we are bringing on, Varun, especially when you look at private equity funds and several other companies. The way they operate is they charge you 20% at any returns you make over and above 8%.
Wow.
That is including rent. So clearly, these guys are ripping you off and charging you those high fees. Again, clearly that's the business model which you're buying into. But we felt that when it's your money, your risk, everything, how can I take the rewards if I'm not able to generate returns for you?
You pretty much brought in the VC thought process, right? This sounds like a syndicate to me, right? Where not only you're taking a bunch of investors into a deal, but exactly the same way the deal happens, the payback also works in a similar way. This sounds like an angelless syndicate in real estate.
More or less. That's what we're building.
Fantastic. Hey, Sudarshan, congrats on the success. Thanks for coming on the program.
Pleasure. Thank you so much.
Okay, and that brings us to the end of this episode of Stars and Startups. Don't forget to subscribe to the show wherever you're listening to it. And please share the podcast with your friends and whoever you think may enjoy Stars and Startups and listening to the doers from the Indian startup ecosystem. I would really appreciate it if you could leave a feedback if you're listening to this on iTunes. And of course, if you're listening to any other channel, do comment, like, share, and subscribe. Okay, I will see you on the next episode.